XRP has been trading between 130 and 145 for 90 consecutive days. 15 cents on an asset that moved from 53 cents to $3.65 in 5 months. And right now, in that same compressed range, 3 completely separate technical models are producing the same signal. Dark Defender's Elliott wave ABC completion at 131 says the corrective phase is done. Martinez's symmetrical triangle on the daily chart says a 26% move is imminent from current levels. The weekly MACD has printed 3 consecutive green bars and is curling toward a bullish cross for the first time since September 2025. 3 models, same message. A directional move is coming. The only open question, which the data does not answer, is whether the legislative catalyst arrives before or after the price makes its first move. And that question just got a specific date attached to it. Here is why May 11th is the date every XRP holder needs to understand precisely. Makes that date more significant than any previous legislative milestone. The Clarity Act markup is confirmed for the week of May 11th. Galaxy Digital's Thorn published that assessment within hours of the stablecoin yield compromise text going live on May 1st. Armstrong, the man whose withdrawal in January killed the first markup attempt, publicly endorsed it. Mark it up. When the stablecoin yield debate was unresolved, the technical compression and legislative uncertainty were compressing XRP from both directions simultaneously. If the markup arrives on May 11th, while the technical structure is coiled at the $1.35 to $1.45 compression zone, you have a technical breakout setup meeting a fundamental regulatory catalyst in the same week. That combination, coiled chart, approaching catalyst, has specific historical precedent in XRP's price structure. So here's the question most analysis isn't asking. XRP's whale-to-retail spread just dropped to 89.3%, the lowest level since 2024. Retail interest is measurably returning. Exchange inflows and whale transaction counts above $100,000 have remained stable since February. No fresh spikes in selling pressure. And yet, according to BN Crypto's May 2nd analysis, the NVT ratio remains above 300, which has historically signaled price overvaluation relative to on-chain activity. So, technicals say breakout incoming. Fundamentals say the catalysts are aligned. On-chain data has one specific warning. What is the NVT ratio telling you that the chart isn't? And should it change how you think about the May 11th markup? That's what we're going to answer precisely. This is XRP News Flow Signals. We track the technical structure, the on-chain flows, the legislative calendar, and the institutional mechanics, and we connect them into one coherent picture. Data, not narrative. Let's get into it. Let's be precise about what the charts are actually saying right now, because the precision matters for understanding what a breakout above $1.45 actually means. Signal 1. Dark Defender's Elliott wave completion. Dark Defender published this on April 8th after XRP bounced from $0.31. $XRP broke our orange resistance on the 3-day chart after respecting our structure and support, $31 white Fibonacci line, multiple times. C-wave complete. Resistance support triangle break. RSI bullish cross. A new all-time high is in sight. The technical framework. XRP's ABC corrective wave that began after the $3.65 peak in September 2025 has completed at $31. The Wave 5 target from the completed structure, $5.85. The XRP BTC RSI dropped to 24, most oversold since October 2025. Prior instances of that oversold reading produced rallies ranging from 65% to 345%. Signal 2. Martinez's symmetrical triangle. Martinez published analysis on May 2nd. XRP is coiling within a symmetrical triangle on the daily chart, with support at $35 and resistance at $45. The pattern projects a 26% move upon a confirmed breakout. A close above 145 targets 182. A break below 135 risks a drop toward $1. The key trigger: a sustained daily close above 150 would unlock approximately 16% additional upside toward 170 per BN Crypto's May analysis. Signal 3. Weekly MACD and RSI structure. As of May 2nd, the weekly MACD has printed 3 consecutive green bars and is curling toward a bullish cross. The RSI has been climbing slowly, while remaining below a descending trend line drawn from December 2025 highs. Per BN Crypto, volume on the weekly chart keeps contracting, a classic side of compression before an expansion move. And daily MACD and RSI near neutral, while volume fades. Historically, that setup precedes a directional break rather than continued chop. The consistent message across all 3 models: compression phase near completion, directional move incoming. 145 is the first confirmation level. $1.82 is the next meaningful target if that level clears. But here's the on-chain warning that modifies this picture. And if you don't account for it, you may misread the breakout signal when it arrives. That's next. The NVT ratio, network value to transaction volume, measures whether a crypto asset is overvalued relative to its actual on-chain usage. XRP's NVT ratio remains above 300. BM Crypto's analysis is direct. For the bearish NVT signal to fade, the ratio must drop below 300 while daily transaction volume simultaneously picks up. What does an NVT above 300 tell you specifically? It says the market cap is elevated relative to the actual on-chain value being moved on the network. In practical terms, the price is ahead of the on-chain utility, and for the price to sustain a move above $45, on-chain volume needs to grow proportionally. The catalyst that would produce that on-chain volume growth? ODL corridor activations from Ripple's bank partnerships. K-Bank's Phase 2 ODL pilot, launching through the MENA region. RLUSD settlements on OKX's 280-plus trading pairs, creating ledger demand. Each of those is real, documented, and on the near-term roadmap. But none of them are live at the scale required to move the NVT below 300 today. Now here's the stablecoin yield catch that most retail commentary on the Clarity Act isn't discussing. The compromise text published on May 1st bans passive yield, meaning if you hold RLUSD or USDC in a wallet, you earn nothing on the balance itself. Activity-based rewards tied to actual payments and transfers are protected. But static holdings? Zero yield. For XRP holders who plan to park profits in RLUSD and earn while waiting for the next entry, that window is closed. The bill's no loopholes enforcement language is explicit. Regulators can create new rules at any time to shut down any new tricks. This does not change XRP's fundamental thesis. It closes a stablecoin strategy that some retail holders were planning on. And it means that when XRP runs, the capital that would have sat in yield-bearing stablecoins will either stay in XRP longer or return to traditional finance. For XRP holders, the stablecoin yield ban is structurally bullish for holding XRP. For new project founders, it is exactly what Ripple's regulatory team navigated for 5 years. And now, the path is defined. And that brings us to the development that nobody connected to the May 11th markup, because it arrived the same day from a completely different direction. And it changes the global institutional story for XRP in a way that most domestic US coverage won't explain. That's next. On May 2nd, yesterday, independent researchers published a paper specifically highlighting XRP's technical fit as a neutral settlement asset between BRICS economies. This is not a price target article. This is a technical analysis of whether XRP's architecture, 3 to 5 second finality, 0.002 per transaction, 1,500 TPS, 150 plus independent validators across 45 plus countries can function as a non-dollar bridge between renminbi, rupee, real, ruble, and rand. The geopolitical context. BRICS nations have been publicly pursuing de-dollarization since at least 2022. The specific problem: what replaces the US dollar as the neutral intermediary? No BRICS currency is accepted universally by the others. A politically neutral digital asset, one no single government controls, is structurally required. XRP's validator distribution, with no single government holding more than a small fraction of the 150-plus global validators, makes it technically the most neutral settlement asset with institutional-grade throughput. Now, here is what makes the BRICS research paper significant for the Clarity Act markup. The U.S. Clarity Act converts XRP into a statutory commodity under U.S. law. But for BRICS adoption, what matters is not U.S. regulatory classification. It is that XRP has no U.S. government control over its protocol. The Clarity Act's passage actually helps the BRICS case by demonstrating that XRP is classified as a commodity, not a government instrument. A U.S. government instrument would not be trusted by BRICS nations. A neutral commodity with U.S. regulatory clarity, usable by both U.S. banks under CFTC jurisdiction and BRICS central banks as a neutral settlement layer, is uniquely positioned to serve both market segments simultaneously. That dual positioning, U.S. institutional compliance plus BRICS neutral settlement, is why Chris Larsen, XRP's co-founder and executive chairman, has consistently described XRP not as a U.S. asset, but as a global financial infrastructure layer. If you're finding this kind of connected analysis useful, the technical picture, the legislative mechanics, the global institutional context, all in one place, subscribe to XRP News Flow Signals right now. The subscribe button is right there. We build this every week. Join us. Let's map the next 30 days precisely. May 11th week, Clarity Act markup. If the markup proceeds as scheduled, XRP's first immediate move, $1.45 resistance test. If that level closes above on meaningful volume, $1.82 target activates. If markup is delayed, range-bound $1.35 to $1.45 continues. May technical trigger, daily close above $1.50. Per B in Crypto's analysis, a clean daily close above $1.50 would unlock roughly 16% of upside toward $1.70. That close is the confirmation signal, not the markup announcement, the price close above $1.50. May 21st, hard legislative deadline. The original deadline from Senator Moreno: if we don't get the Clarity Act passed by May, digital asset legislation will not pass for the foreseeable future. The markup on May 11th gives enough time for a floor vote before May 21st. Whether Scott can secure the 60 votes determines the rest of May. June, Senate floor vote target. Senator Lummis: we are going to get it to the finish line. Senator Scott: June floor vote expected. If the floor vote reaches 60 votes, presidential signature follows within days. When the signature arrives, Project Crypto implementation begins immediately. The on-chain confirmation signal, NVT ratio below 300, plus rising daily transaction volume. If these two conditions are met simultaneously with the markup week, the technical breakout has on-chain volume to sustain it. Without that confirmation, the price move could front-run the utility and face a subsequent consolidation. The chart. XRP has been in a 15-cent compression range for 90 days. 3 separate technical models: Dark Defender's Elliott wave, Ali Martinez symmetrical triangle, weekly MACD structure, are all signaling imminent directional break. $1.45 is the first confirmation level. $1.82 is the next target if $1.45 clears on volume. $1.31 remains the structural floor. The warning: NVT ratio above 300. For a sustained breakout, on-chain volume must grow. The catalysts: ODL activations, RLUSD ledger settlement, KBank Phase 2, all scheduled. none yet live at the required scale. The legislation, Clarity Act markup, week of May 11th, confirmed. Brian Armstrong, mark it up. Stablecoin yield compromise, passive yield banned, activity rewards protected. Remaining obstacles, ethics language, DeFi developer provision, both in resolution. Senate floor, 60 votes required. Fair shake 193 million watching every holdout. The global signal, May 2nd research paper. XRP as neutral BRICS settlement layer. Dual positioning, U.S. institutional compliance plus global neutral bridge. The architecture that makes XRP usable by both JP Morgan and BRICS central banks simultaneously. The key date, May 11th. If the markup proceeds and a daily close above $1.50 follows, that is your technical confirmation that the compression phase is ending. The chart has been building pressure for 90 days. The legislation is 8 days from a scheduled markup. The global institutional story is expanding beyond U.S. borders. Everything that needs to be in place for a significant directional move is currently in place. The only remaining variable is the calendar, and the calendar has a specific date. This is XRP news flow signals, data, not hype, every time. Disclaimer, nothing in this video constitutes financial advice. All information is for educational and informational purposes only. Always conduct your own research and consult a qualified professional before making any investment decisions.